So Facebook shares, their first full day of trading, down 11% at about just a hair above $34 a share. Steve, Morgan Stanley, the banking company that arranged this is the after hours trading, so it's down even more in after hours and continually going down. Morgan Stanley taking a lot of heat for this.
Yeah, I mean, this IPO
messed up.
This has been a big flop. I mean, this has been one of the biggest IPOs ever. It really, there was so much demand, there was so much anticipation leading up to this, and the big problem right now is just there was too many shares out in the market and there weren't enough demand to meet the supply of shares out there. And so you saw on the IPO day on Friday that the stock it had a little bit of a pop and came right back down and kept bouncing along the $38 level. That's the IPO level, and you could just see it by watching a chart that Morgan Stanley and the other underwriters were in there and they were propping up the stock.
Did they do anything today? Do we know that?
We don't know. We don't know that, but if you just look at the chart, though, it looks like they didn't do much, right? Because the stock came way down. And so, it was down as much as 14%. I think it finished down 11% today. And you could just see that it may have found some sort of support or some sort of floor
it was
around the $33, $34 level. But
it's still dropping in the after hours. So the quote that I like from this story by Gina Chon and Drew Fitzgerald says, quote, "The underwriters completely screwed this up," end quote. Michael Pachter, analyst at Wedbush Securities, the offering, quote, "should have been half as big as it was, and it would have closed at 45, he said. So is what you kind of hinting out there, that some people got greedy? Yeah. Perhaps just a little bit?
Just a little bit. I mean, there's a valuation problem, right? I mean, this is for a $100 billion company. It just doesn't, it's not growing, and it doesn't, let me rephrase that. It doesn't have
growth
the sales.
Is slowing.
Growth is slowing. It doesn't have the sales and profits that, a $100 billion company needs to have. And so that's the big worry right now. And I think that if you compare it to what some of the other big tech companies are trading at, if you look at Apple, Google, this stock is still way overvalued and still very expensive compared to those other ones.
Well, the line I liked that I saw over the weekend on Twitter was someone putting out there that, if Apple was valued the same way as Facebook, it'd be worth almost $4,000.
Exactly.
Which is ridiculous.
Right,
I mean, so clearly there's a lot of worries here. Is this a black eye for Morgan Stanley?
It's a black eye. It's a black eye right now. I think this is one of those things where, there's going to be a lot of attention around what Facebook shares are doing in the first few days, but ultimately, I think you could see it settle at some point, maybe in the low 30s, which is where the stock was originally priced. That was the original price range before the underwriters boosted it, and there seemed to be a little bit more hype and anticipation. So, is greed a factor? Absolutely. I mean, there's no question. And I think if they had just stuck with their original price range, they wouldn't be in this predicament right now.
Well, I'm sure we'll be hearing about this for a while. I'm sure there's a lot of red faces around there in Morgan Stanley. Thank you very much.